Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking for you at this hour. Markets fall towards the lowest point of the day. The Nifty falls towards the 12,250 mark. Banking stocks are the top laggards, while the VIX has seen a rise. Kotak Mahindra Bank is trading with losses after its third quarter numbers. Net profit for the lender was below estimates, while asset quality saw a marginal deterioration on sequential basis. Indian Oil Corporation remains the top loser on the Nifty 50 index. The stock will be excluded from the Nifty CPSE index come January 24th. And the results of the Nifty heavyweights failed to impress the street. Reliance Industries, TCS and HDFC Bank are together contributing nearly 65 points to Nifty's downside today. Good afternoon, Neeraj. Well, clear signs of profit booking after hitting once again fresh highs just in the opening session. Yeah, and very interesting. I mean, we were surprised in the morning, Navneet, as to why is it that Reliance or HDFC are showing the kind of reaction that they were. But, well, that was short-lived and the markets came off as well. Those three heavyweights in particular, and then add to that the kind of pain that Kotak Bank has shown, as a result of which I think some of the other private banks also might be under pressure, which is leading to the Nifty Bank Index being down about 1%. So it's essentially the banks which are doing this. This is very important. The kind of reaction that Kotak has shown, 1653, and I'm very interested in seeing what they have to say in the con call today. Because mind you, the other way to monitor this is with Kotak and IndusInd Bank both showing weakness in the CV portfolio. Some of the other CV financing companies could also be under pressure. So you've got to keep all of this at the back of your mind when you are looking at this. However, the Bank Nifty is corrected, and let's get the heat map up on the screen, because you will see that the heavyweights are not participating today on the upside, and that's the result why there is pressure on the index. So while IOC, Z, etc. are all fine, the problem is here. TCS is down 2.5%, Reliance is down about 2.5%, and HDFC Bank is down about 1.39%. These are the three top weightages on the index, and when all three are down in tandem today, result reaction, there is a problem. Add to that, Bajaj Finance down 1.25%, and Kotak Bank down about 2.5% as well. Axis Bank is down about 1.2%. So you clearly have a problem in the banking space, and that is reflecting out here on the index. Reliance and banks down, very little chance of the index doing well. IT could be doing okay. Actually, I don't even see any of the top names in the IT space. Actually, even just say for Tech Mahindra, we don't even have an IT name in the top 10. So a small stock like Bharti in terms of weightage, or an ICICI Bank holding out, but this is few and far, really. A lot of pressure at the large cap end of the market. I wonder, Devina, if the mid caps are doing slightly better, and if there are some key buzzers on the upside in the session today. Yeah, interestingly, HCL Tech actually did so well. I mean, you would have anticipated the stock to have it did have a decent opening, but I guess the entire market and the pressure it's putting is dragging even this counter down. Yeah, IT is certainly under pressure today as well. Yep. Very strangely. Mid-caps though, there is a slight bit of outperformance in today's session. They're down, but not as much as the large cap space. So the benchmark index is down, the mid-cap index is down about nearly 0.5% or so, actually under 0.5%. Small cap even lesser, actually. What's gaining ground? Prestige has stayed, and this has had a phenomenal run in the last 1 week, and it continues to do so well. Today's session also a big upside of about 10% of the stock. Natco Pharma, Ajanta Pharma, two stocks which are doing well. Torrent Pharma is the other one, actually, that most analysts are betting big now on. It's not in this list, but that's a stock to watch out for. Cummins India, Jubilant Foodworks, 1.5% gain for these stocks. What's losing out is RBL Bank, 4.5% lower today. Oil India is down about 4.5%. Bank of India, REC, Godrej Agrovet and Glenmark are some of the bigger losers in trade today. Amongst the small cap index stocks, which just quickly come up on your screen as well, what's doing well is IRB Infrastructure, which is up 15%. Chennai Petro, again, this is a stock which is doing well since the last 5 or 6 trading sessions. Cochin Shipyard, again on that Nifty CPSE index rejig, the inclusion of Cochin Shipyard is leading to the gains of about 3.5%. And I think there's NHPC as well. There's Power Grid, so those movements on the back of that. JK Cement is up about 1.5%. What's not doing well is Spandana, Spurti, Kaveri Seeds, Chambal Fertilizers. Fertilizer stocks taking a little bit of a backseat today. Gujarat State Fertilizers and Chemicals also down about 3.5%. But overall, the broader market mood is still better off compared to the sell-off in the larger benchmark index stocks.
What's happening in the futures and options space? Navneet is joining us to tell us that. Navneet, good afternoon.
Good afternoon, Davina, and thanks for that. In terms of the futures and options trend, let me tell you first, the Nifty is off nearly 160 to 170 points from its opening highs of 12,430 that we saw in the opening tick, and it didn't trade above the mark of 12,400 for a long time. It opened above the mark, and from there onwards, it was selling pressure, which came in a rather profit booking. No major build-up seen when it comes to Nifty futures, but I think Bank Nifty is the one which is in action. As you can see on your screen, open interest is up nearly 30% for Bank Nifty futures. This has been trading below its 50 DMA right since Friday as well. And for Nifty now, I think watch out for 20 DMA, which is somewhere about 12,225. We've defended that mark so far for the day. Let's see if the closing can come above that. Volatility has risen. You've seen the India VIX, which is up about 7 to 8%. Remember, last week throughout, markets were trending higher, but VIX did not move. It did not correct much. It was hovering around the mark of 14, and you are seeing strong gains coming up today around the levels of 15.2. Very quickly then on the option side, 12,300 call is the one which we breached that level, and there is fresh writing which has come in there. So 25 lakh shares have been traded so far, and you've got the 12,400 which is out of the money strike, which this is the level which we crossed in the morning, and there too you are seeing fresh writing in trade. While on the put side, 12,200 will be a support to be watched on the downside. In terms of individual stock futures, Power Grid has seen significant surge in open interest, and this is right from the word go in the morning when the markets open, and this is due to the stock getting included in Nifty CPSE index, and 52% of the quantity, by the way, traded on the cash side has been marked for delivery, which is a positive sign. 56% higher when it comes to OI build-up. Torrent Pharma, the stock's been touching fresh highs. Friday was a day when it saw strong gains, and those continue today as well, even in a weak setup. The stock's up about 11% so far, and the futures are indicating further long position even at these higher levels. In Kotak Mahindra Bank, the stock was trading in the red, and of course the numbers now have come. Weak set of numbers. It is been taking support at its 50 DMA. I think post the numbers it would have slipped below the 50 DMA now, and we did see fresh riding around the 1700 and the 1680 call strike. So those were the key resistance to be watched on Kotak Mahindra Bank.
All right, many more numbers actually to even track from the mid-cap space. Some of them did not do too well, disappointed the street, and then be taken to the cleaners. A stock that has taken a beating after its third quarter results is GNA Axles. The stock has seen its biggest one-day drop since November 2016. The company's top line and bottom line, along with its margins, was a disappointment. We caught up with the management earlier in the morning. Listen in.
Q3 is really affected our top line and bottom line also. So actually, earlier, more than a year, the domestic CV market was down, and even this year, off-highway market as a tractor market is going minus by 13 to 15%, and suddenly this in Q3, North American market has not supported us. It has gone down by 38 to 39%. So definitely it has affected our Q3 results. In Q3, whatever work in progress we have used to produce the goods, the buying was expensive. So wherever our sales prices for North America and European market, those were fresh prices, those are with a lower pricing. So it has affected our EBITDA margins. But this can improve. This is a temporary phase. This can improve in next 2 to 3 quarters as the old expensive inventory will be consumed. And as so far as top line is concerned, we have no hope in next 2 to 3 quarters any improvement because of all segments from domestic, Europe and US is down. Actually, everybody in CV market, commercial vehicle market, people are waiting for policies, in a budget, the upcoming budget. And from 1st of April, people are hopeful for the new scrapping policy also, which can give some kickstart or improvement in the CV market. We are still after completing third quarter, so overall we are 6% plus, and we are hopeful we will close this year equivalent or slightly better than last year. Bottom line average out, we are hopeful it will be in the tune of 13.5 to 14.5%.
Well, another stock that's taken a beating in today's trade is L&T Finance. AUM growth was weak and so was disbursements. Here are Dinar Dubashi, MD and CEO of the company, who explains the key takeaways from the quarter gone by.
The most important perspective is that this quarter is another step in our ability to deliver assurance, in our ability, in our quest of delivering a steady performance, however turbulent the times may be. In good times, obviously, the performance will be steady and good, but even the turbulent times, which have been there for the last 5 quarters at least, we have always delivered a steady performance in terms of margins, market share, credit cost, GNPAs, portfolio quality, and obviously top quartile ROE. So this quarter to be seen as another step or another proof of our ability to deliver that. So that is number one. Number two, very important one, is this quarter has further accentuated the trend, not only for us, but for all our peers, quality peers, is that out of the difficulties among the NBFC sector, very clearly distinguishing has been done for top-rated NBFCs belonging to good parents, of good parentage. And that trend has been seen for the last couple of quarters, but last quarter that was a very accentuated trend, and we raised our almost highest ever quarterly funds raised around close to 10,500 crores. The important thing is these are all long terms. They have reduced our CP borrowing from 16% to 9%, even if the ALM can take more, but at this point of time it is better to be safe. More importantly, these long-term funds are from a diverse sources. They are from private placement of NCD, public NCDs, ECBs, PSL loans, bank borrowings. So all sources they have been raised. And last but not the least, while moving so substantially to long-term funds, the cost of funds has actually come down sequentially from 8.61 to 8.54. So that's the second message that is very, very important in this quarter's result. The third message, which is very important in terms of disbursement growth, is across industries we have followed our strategy of either following the market, improving our competitive position, or maintaining the competitive position, or improving it market by market. We don't look for aggressive growth when the market is going down, because that will be toxic. That growth will be toxic. But the growth has kept in pace or even bettered the market in industries where we want to grow, industries where we want to moderate, like real estate. We have been able to further improve the quality of disbursement, going to bigger and better developers. So across the disbursements that we have done have been in keeping with that strategy of doing better than the market when the market is not doing so well. And last but not the least, the disbursement degrowth that you see is not because no longer because of any fund availability or anything like that. It is a part of market growth or of our strategy. We can now confidently state that any amount of funds that will be available required for our growth is now available and not only available but available at the right cost. So these three would be the big messages of this quarter results.
Well, one more set of numbers on your screen, which is pulling that stock lower, is Federal Bank. And just as we were about to tag them, that the flashes have gone off, but the net profit has grown about 32%, if I'm not wrong, and which is where that brief spike came in. But besides that, there might not be too much in the results for the stock to move up higher. Remember, this was at 85, 86 when the IPO of Catholic Syrian Bank came about, and everybody was talking about how the response that CSB got would get Federal Bank to do better in terms of the multiples that it has, etc. But all of that has been hogwash. The stock has been languishing at these levels. The pains that it had the quarter before last seemingly still weighing in, and for now the asset quality is improved, the net profits have improved, but I don't think the market seems to be really liking these numbers too much, because after a brief flash it's again succumbed to some bit of selling pressure.
The provisions too on year-on-year as well as sequential basis have reduced. The provision for the December quarter is at 160 crore versus 251, which was seen in the September quarter. Marginal improvement, Neeraj, as you highlighted, in terms of asset quality, provisions being lower, the bottom line growth coming at 30% plus, but still we are seeing some selling pressure coming. I think we'll wait by for more details in terms of how the NIMs and slippages has been
the key problem for Federal
Kotak,
Bank.
HDFC, all of them have been reporting
last
fresh
quarter
slippage.
in fact, it was the slippage number that spooked the market for Federal Bank. 540 crores was their slippage.
In this
last
quarter, the numbers have looked weak.
This quarter, we're still waiting those numbers, but I think that's and provisions last quarter had increased. So if they've reduced provisions this quarter on a quarter-on-quarter basis, then you really need to watch out for what those slippages, what those numbers for slippages are, and whether they've actually come off or not.
Yeah. And I think this explains, right? I mean, while this number is okay for Federal Bank, the slippage is watched out for Kotak. The loan growth number, as Darshan was telling me, right, at 7% or thereabouts, is lower than probably what an innocent bank has delivered as well. So, and it'll be very interesting to see what the commentary from Kotak Bank comes about. And I think people will now start doing that comparison again between Kotak and HDFC. Those two always take the pinnacle. Stark difference in valuations for Kotak vis-a-vis HDFC Bank as well. What do they say about the commentary ahead? I think that's the key question that people will be watching out for. But banks and financials firmly in focus today, and the Bank Nifty now is 450 points down. It was down about 1% when we started the show and has taken a sharp knock downwards. The MRR, just before we get in the global guest, the MRR, or the stocks which are off the day's eyes, look at that. Kotak Bank is at 1618. I think that must be down about 4 or 5% from 5.5% of the highs of the day, but on an intraday basis as well. I think Kotak Bank must be substantially off. Just get that Kotak Bank intraday for you. It was at 1648 or thereabouts just about 15 minutes ago, and now a really sharp knock downwards. I'm not surprised there. As I would watch out for the CV financiers. IndusInd Bank had issues on the CV portfolio. Kotak seems to be having that. I think it'll be interesting to see what Shriram Transport or some of the others also do.
Only iBank is in the green as of
ICICI
now
Bank, yeah.
For the larger names at least.
Yeah, but this one would be interesting to monitor, Shriram Transport Finance, and whether they can actually do better or otherwise. That stock, the results come out on the 3rd of Feb, so still some time, but I will watch out for this one very, very closely. However, let's get in a global opinion. Now, while there is a bit of pain on the Indian bourses, Ben Ritchie of Aberdeen Standard Investments joins us right now on the show. Ben, good having you. Thanks much for joining in. The world markets still seem to be doing okay, and the mother market, US, did very well in Friday's session to today. There's nothing too much untoward either happening. What's your sense of how equities as an asset class could do in the near to the medium term, Ben? Okay, I think Ben can't hear us. We'll try and repatch that line with Ben Ritchie of Aberdeen. It would be an interesting conversation to have as well. So that is that one conversation I'm looking forward to. But speaking of that, actually just want to tie in what's happening in India vis-a-vis what's happening in the world markets too. If we can get the European markets on the screen for a moment and just show you what those are doing, and then try and get in what the Dow futures are doing as well in the session. So no major gyrations out there in the European markets too, just about flattish, hardly any move there. So do watch out. The US markets and the Dow futures should also come up on your screen after having a decent enough outing in Friday's session. In Monday's trade, these markets just about flattish, so hardly any changes in those markets as well. So the world is doing what it is doing. I think Indian markets, spooked by what's happening to banks, are actually correcting quite strongly. But of course, remember, it's not just banks. Reliance and IT too are not having the most pleasant of outings in the session today.
IT, you would have hoped for it to be a better day. Not obviously for TCS because you would have anticipated an outperformance for the kind of run-up that the stock has already seen. But at least for an HCL Tech, which delivered on its numbers, it didn't have a bad quarter. It did well. It in fact gave you a better guidance as well. It upped its guidance in terms of its revenue growth numbers, its operating margin numbers as well. But the stock, after opening positive by about 4% is back down to levels of about 591. Remember, aggressive brokerage target still closer to 720. That's the target price that's been pegged in for HCL Tech. And it's important to see now what happens to the likes of an Emphasis that will be reporting its numbers, the likes of a Hexaware and how that reports its numbers as well. And from the larger names, we'll be waiting to see what Tech Mahindra does.
Okay, but enough gloom and gloom. Let's also try and talk about some positivity in the session. And the stock in focus is Prestige Estates. It's seen its biggest one-day jump since November 2019. And since it's up about 10%, I thought it's important to highlight the trading pattern as well as to what possibly could be the reasons why Prestige is doing what it is doing. Remember, the results come out in a few days from now, so nothing as of now. But just bring up Prestige Estates and the trading details on on the screen. Now, the shares are up 45% in the last 3 months, and this spike tells you about what caused or where did the maximum gain come in, and that was in the month of January, really sharp spike for Prestige Estates in the last few days. Now, in today's session too, the stock has gained quite tremendously and on very high volumes, I might add. Look at these volume numbers out here today. Substantial uptick compared to the 20-day averages. So in the past, when Prestige has rallied, it hasn't rallied on very strong uptick in volumes because the 20-day chart is very flat. It's not really gained in the last few. But today's volumes, substantially higher. I guess that there was significant upside potential on very few analysts covering the stock, but significant upside potential for Prestige Estates before this rally. But when in the last 12 months, if the stock has nearly doubled, then the return potential naturally goes down. The question only is the people who are buying today believe that these targets might change once maybe the results come out. Now, what I would watch out for in the results is if viewers would remember that there was a Knight Frank report which spoke about how Bengaluru, it came out all guns blazing when it came to commercial property as well as residential property, and the survey done by Knight Frank for the months of October, November and December, if I'm not wrong. Now, if that is happening, Prestige is located right in the middle of it. The properties are getting constructed around in that area. I think they gave out significant properties for lease as well as per the Q2 update too. So all of that is working well for the company. The question only is, can it deliver in the quarterly numbers, and can the guidance be good in a scenario wherein Bengaluru might be doing well, but the other markets in residential space aren't. So that's the question I think that all of us will need to wait and watch and maybe ask the management of Prestige too. But for now, the shareholders aren't complaining. It's been a remarkable uptick for Prestige. We've spoken about how Godrej Properties have done. We've spoken about how Phoenix Mills has done. This one, with the 95% gain in the last 12 months, is no mark with the bat, as they say in cricketing terms. I think it's done exceptionally well. And today is not different. Back to you guys.
Okay, that's about Prestige Estates, which has been outperforming. In fact, with the 10% gains that you've seen in today's session, the stock is trading at its life high level. Just in the month of January, by the way, it's gained about 20 to 21%. And looking at the numbers, expectations, I think a couple of brokerages are factoring in that the leasable area for this one for the quarter gone by could be higher by 12%, on account of which I think a couple of brokerages are factoring in that the rental income that the company makes on year-on-year basis could rise by about 30 to 35%. So let's see how the numbers pan out. But for the time being, the stock's on a roller coaster ride, so to say, at levels of 411. Okay, moving on then, there are a lot of PSUs which are in focus, and the reason for the same is the National Stock Exchange has announced a rejig in its Nifty CPSE index. The changes come into effect from Friday. Nikki Mirchandani is standing by with all the details of the stocks that have been included and excluded as well. Nikki, over to you.
Thanks, Navneet. Well, the notification has come in on a Friday, and as per the earlier criteria, the stocks having more than 51.5% of government holding under promoter category were first put across in this index. And now, as per the recent criteria, the stocks having more than 51%. So effectively, there is just a 0.5% difference between the existing criteria and the revised criteria, with the revised criteria being a little lower than that of existing one. With that, stocks that have been excluded are Indian Oil Corporation and Power Finance Corporation. And on the ones that have been included are 4 of them, that is Cochin Shipyard, NHPC, NMDC and Power Grid Corporation of India. Motilal Oswal suggests that these changes, I mean, if you go with the notification, it says that the changes are going to be effective since Jan 24th. The inflows that would happen on account of these changes are effective. You would be able to reflect that on Jan 23rd market close. And Motilal Oswal has come up with a note suggesting the flows that it estimates, given the AUM of this CPSE ETF to an extent of around 10,600 crore. Effectively, it is calculated at outflows to an extent of 2,849 crore out of the two stocks that have been excluded. And for inclusions, it expects an inflow to the tune of around 3,083 odd crore. In reaction to this, the stock price have been fluctuating. IOC and PFC both have been seeing maximum amount of selling. IOC has fell as much as 7.3%. PFC has fallen as much as 8%. And if you look at on the gainer side, you have Power Grid Corporation, which has risen as much as 6.5%. NHPC to the tune of 20 odd percent, and Cochin Shipyard to a tune of around 15.5. NMDC also has reacted in session today, 6.3% in trade. Also Also, one more development coming in for NMDC, a price hike undertaken for this month is also auguring well for this counter as a whole. Back to you guys.
Right, Nikki, thanks very much for that. Let's also get in our global opinion. It's important at this time as well because you are seeing some unrest once again picking up in Iraq and Libya, both OPEC oil-producing nations, and that's going to have already had its impact. 1.5% higher on crude oil prices since Friday's session. So what does that do now? Is there more issues to be watched out for, at least on the geopolitical front? Global opinion, Ben Ritchie of Aberdeen Asset Investments. He's joining us right now on the show. Ben, while we're taking a look at global equity markets and how they've been performing, obviously there are various other factors that could halt this excitement around equities, which one of the key aspects being the geopolitical issues that we are currently facing. Do you feel that at this point it is more prudent to take a slightly more conservative stance on equities, or that wouldn't be a bother and investments into equity will continue on the back of heavy liquidity?
Well, I think it's more likely, I think, that overall that we're going to continue to see a relatively positive approach towards global equities. But I think that really is set against the context of valuation. We've seen quite a lot of positive progress in the last part of 2019. We've seen resolutions to Brexit. We've seen progress in US-China trade talks. We've seen stabilization in a lot of the weaker manufacturing and industrial data that we'd seen throughout 2019. And I think that has buoyed equity markets globally over the start of this year and into the last part of 2019. And I think it's about delivery from companies in terms of earnings that will probably really be, I think, the key driver of equity markets from here, while the news around Libya and Iraq is putting perhaps a little bit of pressure on markets and pushing oil prices up a bit. I think overall that's not going to be the key driver of global equity markets from here over 2020. I think that's really going to come down to those big issues around trade, around the performance of the global economy, and ultimately about corporates and earnings delivery.
Hi, Guy. Hi, Ben. Pardon me. Sorry. Good afternoon to from India. In terms of valuations, you just highlighted, and a lot of these markets which have been trading at their life highs, be it the US markets, the valuations are looking on the expensive side. And similar is the case for the Indian equities as well, which have been trading around their all-time high levels. Are you finding any value here at a time when there is a de-link between what the equity markets have been doing and what the growth numbers have been pegged at? The advanced growth number, I think, for this year have been pegged at about 5% now. Is there any value left in Indian equities? And also, what are your key expectations from the upcoming budget on 1st of February?
Well, I think when we look globally, we still see pockets of opportunity, and I think you've got to see that in the context of incredibly low interest rates as we look around the world. I mean, even in those markets where you have positive short-term rates, they're still at low levels historically, and I think that continues to make equities, and particularly equities where you have confidence in the outlook, where you believe that the earnings growth can be delivered, then I still think that makes the equity markets look relatively attractive, certainly to credit. And if I look at the markets where I spend most of my time focusing in Europe, then when you look at the cash yields that are available relative to the yield on government bonds, and the spread is as high as it has been for many decades. And I think in that context, I think that's going to continue to provide a supportive outlook for equities. And if you can find the right kind of companies where you actually see steady deliverable growth, perhaps, or even more exciting than steady, perhaps higher levels of growth that you believe and are confident that can actually be delivered, then current valuations are probably still sustainable, set against that very low interest rate and cost of capital background. So overall, I think when we look at asset classes globally, we still think that equities look relatively attractive compared to credit, and I think whether we're looking to emerging markets or pockets of developed markets, we see opportunities across all of those different areas for us.
So you are looking at opportunities within the equities, and that's for both emerging as well as the developed markets. But what are the current and the recent trends suggesting with regard to fund flows? Is it going more into developed market equities or into emerging market?
Well, we've certainly seen a stabilization in terms of equity flows in developed markets. So if you look to Europe, which had seen some of the most substantial selling over 2018 and 2019, I think we saw something like $150 billion of assets leave European equities over those 2 years, the last part of 2019 and into 2020 has seen some relative stability and even some signs of inflow. So I think where investors are seeing some signs of stability from a political perspective, from an economic perspective, also expectations from an earnings perspective leveling out, then that's, I think, helping to create an environment where people are looking to put money back to work. And I think that's really being driven by the liquidity that we're seeing in markets, which remain very significant, and by that cost of capital, which continues to be very low. And if we can find that environment of some certainty and stability, then certainly that is pushing investors towards equities where they can find those relatively attractive cash yields. And I think we're likely to see that across the board, and we've seen that with flows into EM debt. We've perhaps seen that as well with picking up of appetite for certain areas within EM equities alongside that. So I think given the excess liquidity that we see in global markets, given that very low level of interest rates, I think providing investors feel comfortable with the sort of macro political backdrop, then they're going to continue to look to put money to work in those markets, because at the end of the day, that's where the best returns can be found.
Okay, Ben, we leave it on that note. Appreciate you joining us today and taking us through your views on the world markets, which equities so far are still driven by liquidity, which is there in the system, and equities as an asset class remains a favored one due to that. All right, before we go across to the techies, just want to mark the slippages number for the December quarter of Federal Bank, which is flashing there right on the screen. It's at 593 crore, and probably what we were highlighting, maybe it's the higher slippage number which is weighed on the stock, because we've not seen any major recovery coming by. The stock still sitting with cuts about 1.5 to 2%. Of course, we wait for more fine print of the numbers, how the loan growth also for the quarter has panned out. But slippages, Davina, you were highlighting, I think September quarter was also 500 crore plus.
541 crores in the September quarter, and that has spiked this quarter as well. So fresh slippage additions of about 593 odd crores for Federal Bank, and the
seems to be recovering now.
It's coming up 1% under still for Federal Bank. It's recovered from the lows of the day. But also bringing in our technical experts, Aditya Agarwala of Securities is joining us right now on the show. Along with him, Ajit Mishra of Religare Broking is here with us as well. Since we're on the topic of some of these banks and the kind of numbers that they've reported, Aditya, before we go to your index call and your call on your specific stocks, let's talk about Kotak Mahindra Bank and Federal Bank that have reported numbers. How do they stack up on the charts?
So definitely, Kotak Mahindra Bank is looking weak at the moment. Look at the volume; it's spiked up and stock is down significantly. My sense is it's a matter of time before it breaks 1600 on the downside, and we can test levels of probably 1580 to about 1570 on the downside. Pullbacks to level of 1640 should be used as an opportunity to create fresh shots in Kotak Mahindra Bank. It will slide to sub 1600. Probably 1580 should be your target if you're looking at Kotak Mahindra Bank. Next, probably if I look at a Federal Bank, yes, that too is looking weak at the moment on the charts. There is weakness in Federal Bank as well, but it has pulled back from the low point of the day, that is 88. On the upside, 92 is a resistance. So I'll wait for more price action probably as the day progresses. Closer to about 92, one can look to initiate fresh shots on the stock for downside targets of 89 to about 88, because the index overall looks weak at the moment. So my sense is these banks will continue to underperform as the day progresses, or probably in the coming trading sessions as well.
Yeah, they've looked slightly wobbly, some of these banking names today. And mind you, Reliance and the others are also looking slightly weak, and which is why we've been saying that adds to the pressure that we have in the markets today. Kotak is 4.5% down, but TCS and Reliance 2.5% apiece. Ajit, a thought on these two names, TCS and Reliance, the two top heavyweights on the indices?
So Reliance, Neeraj, we have already seen a very strong surge prior to the results. So that's why we are seeing this reaction. And if you'll see that the stock is down by nearly 3% today. But, if you talk about the support areas, very closer to the support zone, closer to around 1525 to 1530. So I doubt there will be any major damage in Reliance at least. And TCS, on the other hand, yes, it may see some further profit taking, considering the kind of momentum the stock was likely to witness in case if it managed to cross 2250. So this negation of the pattern may result in further decline below 2145 levels on the spot basis. So in TCS, yes, one can consider going short on bounce, but Reliance is a buy on dip candidate.
Okay, buy on dip candidate for Reliance Industries, and TCS right now sitting at levels of 2160. Ajit, take us through your call on Nifty, and also if you got any trading ideas for us in terms of individual stocks.
Yeah, so Nifty, though we are seeing pressure in today's trade, but broadly, if you'll see that we are still in a range. So I doubt there'll be any major decline in the current levels, considering that we have a major support at 12,200 and 12,100 zone. So I would rather take a contrarian trade and going long in Nifty at the current levels with stop up around 12,120, 170 rather. And closer to around 12,320 should be your target area. And similarly for the Bank Nifty also, we believe this decline is, since it's underperforming Nifty from last week. So a possibility of rebound is quite high from the current levels, because we had a gap which it filled today, closer to around 31,300 marks. So I believe the possibility of rebound is quite high. So it's not that we are very bullish on the market. It's just that we feel that this range-bound consolidation will continue. And on the stock-specific front, we have long and short both. So we have Ramco Cement. After the strong surge, we are seeing consolidation from last 1 week in a very narrow range. It's a buy candidate with 795 as a stop loss and 870 as a target. On short side, the PSU banks, we have hardly seen in respite. When the markets were trading at the record high, still we are seeing that the PSU banks were struggling. So Bank of Baroda is one name where one can initiate for a short the current levels or any bounce closer to 96 for the target of around 90.
Buy and one sell call coming in from Ajit. Aditya, what about you?
So my sense is, Navneet, markets are under pressure, and that pressure might just continue. We're just at an immediate support of 20 DMA, which is somewhere around 12,220, 12,225. So once that breaks, my sense is the gap which we witnessed on the 8th and 9th of January, that might just give way, and we might just come down to levels of 12,125 to about 12,040 on the downside. So if it sustains below 12,220, 12,225, one can initiate fresh shots on the Nifty for targets of 12,180 to about 12,140, 130. That's the immediate support. And if 12,130 also breaks on the downside, it might just slide all the way down to levels of 12,040 to about 12,035 on the downside. So there is resistance on the upside somewhere between 12,300 to about 12,350, and it will be tough for the Nifty to break that. From September 2018 onwards, Nifty has been moving in an upward sloping channel, and this is the third occasion when the Nifty has tested the upper end of the channel, and it's witnessed a sell-off, and it's a good sell-off that we witnessed in the market post making a new high. So overall, the structure doesn't look too bullish at the moment. I'll wait for markets to break 12,200 to 225 to go short for targets of 12,130, 140 on the downside. Coming to stock specific, I got a one buy and one sell. Asian Paints stock has been making higher highs, higher lows, and it's broken out into an all-time high territory. It's an uncharted territory. There is strength in the stock, so I'll go long on Asian Paints for targets of 1930 with a stop loss at 1810. A sell is Z Entertainment. Stock has been languishing underneath, and it's been making lower lows, lower highs continuously on a sustained basis. There is weakness. It's broken down from a bearish black pattern as well. So my sense is it will continue to slide lower as the day progresses, or probably in the coming trading sessions. One can initiate fresh shots in Z Entertainment for targets of 260, keeping a stop loss at 280.
Mind you, the results for Z Entertainment come out tomorrow, so therefore it's an interesting stock as well, and a clutch of others have fallen. Now let's get in Sameer Kalra and try and talk about each of these pockets which are of interest today with him fundamentally. I want to talk about the CPSE ETF impacted names first. We'll probably talk about the telcos, and then a word on Kotak Bank as well, which came out with numbers. Sameer, good having you. Thanks for joining in. First, the technical reactions that we've seen to the CPSE ETF impacted names. There are 6 of them which have reacted, 4 positively, 2 negatively. Fundamentals haven't changed. Would you use this moves as an opportunity to lighten up your positions, or maybe go out and buy any of those names?
So I think these technical issues do create, mammoth movements on the either side, and this becomes an opportunity maybe for a medium-term holder to get out. To get out on the either side, because see what happens once the flows turn and the weightages turn. These are continuous in a momentum. This doesn't change overnight, and we come back to normalization. This happens to let's say a top-up investment as well. So I think that technicality impacts in the short to medium term to the stock flows at least. On the fundamental end, I feel a lot of CPSEs are now burdened with a lot of debt, and if government has to, push the system, it has to push more off the balance sheet, which comes through PSU, right? Like we had a CPSE bond ETF. I think there are more CPSE bond ETF which might come up as a fundraising activity to increase the capex at that. Because if government has to increase the capex, it can be either through PSUs or on their own. On their own, they are facing a lot of deficit. So I don't think so they can manage to do a lot of capex on their own. It'll be through PSU companies, especially the large ones like NTPC, Power Grid. These companies will be the forerunners of these capex cycles. And I think for at least next 6 to 9 months, I would rather stay away from it. See how it unfolds and see a second half balance sheet and then take a judgment call on that.
Okay. The second, the IT names and the two biggies that came out with numbers. One, very good set of numbers. The other one, inline numbers, but the valuations are rich. Both of them have corrected today.
So I think HCL Tech, as we were discussing pre-results, I thought will beat the results up. And the plus point over there is the deal wins are coming. So the consistency in the growth rate might be there for at least 6 to 9 months, if not more. So I think that is a better multiple driver now for HCL Tech and the IT pack. And if you see the cash flow generation has been better at HCL Tech this quarter as compared to even previous quarter. So the execution and your attrition rates are being controlled. So your costs are being controlled. So you have an operating and a financial leverage coming up in maybe in next 12 months or 15 months over there. So I'll stick to HCL Tech. On the other side, if you see TCS, the whole thing is going opposite for them. The deal wins were there, but the execution rates have slowed down. The BFSI part has come off, the American contribution is coming off, and next 12 months for either TCS or Infosys, the execution will be very, important. And that's where even for TCS, the attrition has come up. So that's where I feel the whole opposite situation is happening in TCS especially, and HCL Tech will be a preferred bet, though I would still be away from IT pack as a whole right now.
Okay. Stay away from the IT pack as a whole is what Samir has been advising. But let's just take a look at a couple of other stocks also which are moving around right now. And you've got, of course, we've discussed in details how these PSUs have been buzzing due to those index changes. Pull up GAIL. I think that's also seen some spike. It's been trading around days high now, gains of 2%. Aditya, on the charts at current levels, what do you do? Because this one was weak last week all through, I guess.
I'll wait for this resistance of 130 to take out Navneet before I look to go long on GAIL. 130 is acting as a resistance for the stock, and if it crosses 130, then probably there can be a short covering rally to levels of 134 to about 136 on the upside. If it fails to cross, my sense is it will continue between this zone of 124 to 130 on the in the coming times.
Okay, we'll keep an eye on that one. GAIL at current levels of 128 has seen some signs of recovery from the lower levels. Okay, let's talk about Kotak Mahindra Bank. The bank has just missed street expectations in the third quarter. Numbers came a while back. Shefali Malik is here to take us through the fine print of the quarter gone by. Shefali, tell us, what were the key takeaways from the earnings?
Well, the biggest takeaway from Kotak Mahindra earnings was that the asset growth or the advances growth was below expectations at 10%. So we were factoring in something like a 14 to 15% growth, and that has come in as a key disappointment that the business momentum has totally slowed down. Whether it was a conscious effort on the part of the management or otherwise, that we'll get to know when the management speaks on the con call. But this has come in as a key disappointment. Deposits growth as well has come in at 12%. That again is below expectations of about 14 to 15% growth. Asset quality too, there was some deterioration. Gross and net NPAs both inching up on a sequential basis. Slippages at 1,062 crore rupees were more or less in line with what we had in the second quarter, which were about in excess of somewhere 1,100 odd crores. Their SMA2 accounts have come off to 274 crores versus 431 on a sequential basis. So probably some of these might have slipped in this quarter, and that is the reason for the number coming down. Their provisioning went up, and the margins, that was a key positive in the earnings, that the margins went up to 4.69%. That was that inched up by 8 basis points on a sequential basis. CASA ratio as well was stable at 53.7%. So that's Kotak Mahindra Bank. The biggest takeaway is the business momentum slowing down. That was a key disappointment, and asset quality slightly disappointing. And at the consolidated level, international subsidiaries had a weak performance this time around. On a YOY basis, the international subsidiaries PAT degrew by 30%, and on a sequential basis, Kotak Mahindra Investments, the profit came off by 5%, and Kotak Securities by 14%. So net, not many were expecting this kind of a performance or the slowdown to reflect in Kotak's earning, but somewhere we've seen it in HDFC Bank's result as well, a marginal deterioration or in the asset quality, and the same getting reflected in the Kotak earnings as well.
All right, so loan growth of 10%, not really keeping the street very excited. Shefali, thank you very much for joining in. Samir, your take on Kotak Mahindra Bank?
So I think it's at least if you see the deposits, the growth on quarter, because when the valuations go beyond a certain place, you have to compare quarter to quarter rather than a year on year. Deposits are really slowed down, in at least the market share, let's say, in a way has lost out because you're even lower than the industry growth. So all this advertising spend on 811 kind of scheme, or that is not able to attract any kind of let's say low cost funds. So I think cost of funds might have bottomed out here. A couple of more quarters and you would see cost of funds going up now and impacting the NIMs, which have been at the highest of the, let's say, 15 quarters at least. So on the other side, if you see the asset quality, provisions are high. The gross NPA is almost reaching to 15-quarter high. So, and this trend will not, let's say, remove from itself very soon. And I think it's better to stay away from Kotak Bank now, and even HDFC Bank, if you see, showed some kind of a similar trend.
So if you stay away from the both of those, what do you talk about the others then? What about Axis? What about ICICI?
So I think both are at a very different pace.
No, not the valuation.
No, I'm not talking about the valuation. I'm talking about the journey which they have come. Right? If you see ICICI and Axis, new management is kicked in. They have more firepower. Axis has raised money. They are now going where maybe a Kotak or HDFC was trading, let's say, 2 to 3 years back. So I see more scope over there being expanded, and their, the stress books were already stressed out. So even if the numbers have a slight increase quarter on quarter, they're still given that kind of a let go. But HDFC Bank and the Kotak Bank, when they rise on provisions like this, and the deposit growth is coming off in Kotak Bank. And even if you see advance are growing around 2.6% quarter on quarter. 15-year average is around 5%. So these kind of valuations don't justify for me as an investor holding Kotak rather than maybe a Axis, given the results show the reverse trend as well.
All right, that's on Axis, Kotak, and some of the other private sector banks. Remember, Axis also comes out with its results. We're awaiting ICICI Bank too, that will come out somewhere during the earnings.
I just want to include RBL. It's seen a sharp selling pressure today. It's down 4%. And this one too comes out with the numbers, I guess, day after tomorrow. Yeah. So ahead of, I think, maybe it's just spooked the market sentiment with the numbers that we've seen from other private banks.
Yeah, the stock's down 4.5%. It's not had a good ride up until now, at least. 328 for RBL Bank. Well, iron ore prices are in focus once again. NMDC recently undertook a price hike for the second time, and other miners have followed suit, fearing a supply disruption post the auction of mines in Odisha. To talk more about the outlook on iron ore prices, we're now joined by Mr. Rajnish Kumar Singh, who is the Wholetime Director at Sandur Manganese and Iron Ores, on the phone line. Mr. Singh, thanks very much for taking out the time. Let's talk about the assessment of what you believe the prices of iron ore could do in the near term.
Good afternoon, Rajnish here. So there has already been some increase in prices that we are seeing. We have already proposed to increase our prices about 14 to 15% following NMDC increase in prices. And we expect that the prices will be stable at these levels. We don't see too much of price upwards, ability to price more upwards just because some mines are going for auction in Orissa, because there have been some changes in terms of regulation that they may be allowed to continue mining even when they go for auction. So I think the prices are settling down to a level which is more sustainable, and we are already following it suit with our own increase in prices.
All right. What would be the quantum of these price increases? If you could give us percentage terms as to how much do you anticipate these prices to go up by? Rough
But
ballpark.
14 to 15% is what we are expecting them to go up by.
All right, 14 to 15%. What percentage of the revenues does your company, sir, get from iron ore sales?
Iron ore sales.
Yeah.
About 50% of our revenues will be from iron ore sales.
All right, so this will be a substantial uptick in terms of financials for you too, right?
For quarter 4 is when we will see some results in terms of our revenues as compared to quarter 3.
Okay. Aside from that, while the prices are on an uptick, one of the larger players, JSPL, they've actually said that prices should ease since, if at all the iron ore supply starts from Sarda mines, prices should come down once they fulfill their own requirements. What's your view, sir?
No, I think prices will hold at these levels. They will not ease anymore. And the prices had fallen in the third quarter primarily because there was cut in production by some of the steel producers, and so there was less requirement from them. But I think prices will hold at this level because most of the steel producers have gone back or are going back to their original production limits or production figures.
Mr. Singh, with regard to manganese ore, if you could just give us a sense with regard to your capacity, what is it and what are the capacity utilization levels currently?
We don't have what is called capacity, but we have what is called the EC limit. Our EC limit is close to 6 lakh tons, but we never produce 6 lakh tons. We have always been producing close to about 2.5, 2.6 lakh tons, and we will continue to produce at this level only.
Okay, so you're sticking to 2.5 lakh ton, what you're suggesting?
Yeah, 2.5, 2.6 is what we normally produce.
Okay, what's the yearly guidance with regard to sales?
For this year?
Yeah.
Our sales could be in the same range as what we did last year because we have just started the trial production of our coke oven, so we don't expect much sales to happen from coke production that is going into stream in phases in this quarter. That is February and March is when the coke oven will go into stream in phases. So bulk of our revenues will come from the products that we have been selling last year itself and of the same amount. So there's no increase in quantity of these, and we expect that the prices would more or less be the same as what we got last year. So this year's numbers will also be more or less the same as what we did last year.
Okay, fair enough. So sales, it remains flat on year-on-year basis. Just to clarify, you guys sell everything in auction?
All the ores are sold in auction. Silicomanganese is sold by negotiated.
Oh, okay, and do you guys have any offtake agreement with JSW Steel for iron ore?
We cannot do any offtake arrangement because all ores are sold through e-auction mechanism.
Okay, so nothing as of now. All right, Mr. Singh, we leave it on that note. Thanks for joining us and taking us through the trend primarily with regard to iron ore prices. Remember, just a while back, NMDC has also informed the stock exchanges that they've increased the prices with effect from 19 Jan. And this is the second price hike, which has come just in the month of January. And the management of Sandur Manganese also highlighting the prices have gone up by almost 14 to 15%.
It's a strong move, Samit. You tried these companies. I mean, NMDC is up in part because of the CPSE ETF news, but the price hike also adds to the momentum. And Sandur Manganese also talking about the same.
So I used to look at it, but again,
Sandur Manganese or both? Sandur Manganese. Okay, fine.
So I used to look at it. They were doing well at a certain point when the steel growth was sufficiently, at least 15 to 20% consistently. They were doing around a 30 to 40% of growth on revenue and PAT. There are some signs of bottoming out fundamentally for iron ore as a product, let's say, in that certain sense. There is a certain volume pick globally and domestically, but how much it remains as a sticky point, that's more consistent for me. So I would rather first look at quarterly results showing reversal, and then look at the shorter term data.
Okay.
Because that shorter term data can diverge into one quarter being good, and the next month again the whole fall comes in.
Sure.
So I think it's better to have a 10% upside missed before the fundamentals kick in basically on the base.
Does the trade suggest the same, Aditya? Do you think that these stocks are near points of resistance?
Not at all. If I take a look at the NMDC chart, it's a very strong looking chart, Neeraj, and continues to make higher highs, higher lows. To everyone's surprise, it's moved from levels of sub 100 to about 140 almost now, and it's a sign of strength because it's crossed its probably multi-month or probably it's crossed its 2-year high and trading at 140. It's a matter of time before I believe the stock will test levels of 155 to 160. So I'm looking at those levels of 155 to 160 on NMDC. It's a strong volume-based pullback that the stock has witnessed, and corrections, if you get to levels of 125, 130, should be used as an opportunity to get into the stock and stick on if you're long or already in the stock.
Okay, well, so that's the view on what the likes of NMDC, etc., could do technically as well. Samilkara believes, though, fundamentally try and stay away. So aside of the heavyweights which are weak, I mean, we've spoken so much about stocks which are correcting. Let's talk about a few stocks that are gaining in trade. I just want to mark Deccan Gold Mines. That stock comes out with the results today, and I think on fairly high volumes, it's gained quite strongly in the session. So wait and watch. Don't quite know what the rationale is. It's on the Bombay Stock Exchange and not in the National Stock Exchange. But look at that, 11.5% higher. So it's a small cap, 220 crore market cap. I think is doing well for itself. This is at an 8-month high. Granules India is the other one which has gained. It's trading at life highs or 52-week highs for itself. I can stand corrected, but up about 6.5% and doing well for itself. And Fine Organics. We speak about chemical companies or specialty chemical companies. This one is right up there, doing extremely well for itself. 4.5%, 2,222. It's a really smart move that has come into Fine Organics. So that's the other one you need to monitor. You track Granules or Fine Organics fundamentally?
So Granules I do track, but it's a soft coverage. They are showing, fundamental bottoms in quarterly numbers as well, and the approvals over there are also coming in. But again, how they work on the working capital, because again, when your products get launched, your R&D spends are still has to be consistent. Your cash flows take a hit for a while. So I think over there, that's a little sticky point for me for Granules to reverse. If that reverses and they come out with a better cash flow management, I think it'll become a better bet. But I would still, keep it on my watch list. I'll not totally ignore it out. But I think it'll take a couple of quarters to reverse that.
Is Torrent Pharma on this watch list? That's been trading at live highs.
Yeah, Torrent Pharma was on the watch list at a certain point because if you see, the valuations have gone a bit away from the average 5-year PE. They're now around 45% 5-year average premium. So I think the fundamentals are there. The resistance, the market size of their products are bigger, and they're gaining market share. But on the balance sheet and on the working capital management, they lack a bit because it's at a nascent stage and the products are more newly launched products, so the cash flows are still lighter on them and the margins they have to give away are higher. So I think another couple of quarters or maybe 12 months, it'll be a better place for me to watch.
Okay, but for the time being, remember Torrent Pharma for the second straight day now has touched its live highs. Ajit, on the charts, of course, the futures also indicating long positions are continuing even above levels of 2,000. If somebody is sitting with longs, what would your advice be?
Navneet, I would advise to book profit considering that the stock has already moved up very sharply from 1850 to 2000 plus zone. But yes, at the same time, if you talk about pharma as a sector, I believe that pharma can outperform the others, especially in the short run, considering that we have seen a fresh breakout on the weekly charts from a consolidation range of nearly 7 months. So again, Torrent has done its part. Now Ajanta, Natco Pharma, Divi's Lab, these are the candidates where we may see, the fresh momentum coming in.
All right, Zuza Pharma stocks. Remember, Torrent Pharma was one of our technical analysts, I think Ashish Chaturmutta, who liked Torrent Pharma this morning. And the Divi's Lab, not just on a fundamental basis, but even on a technical basis, has been a favorite of late. The stock's down about 0.5%. though. I just want to quickly look at a few more stocks and then we go across and find out what has made it to Sharad Dubey's list of Fab 4 stocks. Vodafone Idea, 5.5% higher. Started off even higher, I think closer to 10% higher, but then now is just cooled off after that big 25% drop that we saw on Friday. But this one is something to watch out for. Bharti, on the other hand, and Infratel, Bharti Airtel and Bharti Infratel. Bharti Airtel continues to do well. So 511 now on Bharti Airtel. Remember, start was soft. Friday session saw 5% pop. Now today another 2.5%, and this all comes even after the dismissal of the AGR play. Many believing that Bharti Airtel now has a significant chance to be the prominent number 2 player in a 2-player market if it comes out to be so. 511 on the stock. Bharti Infratel is the other one that I want to look at and what that one's doing. That too is getting run about 3% Samir, and then I'll go to Aditya on the.
Now, can I just, before I come to Samir, can I just request Ajit to come in on Bharti Airtel on the charts, because that stock is looking very attractive.
Neeraj, we have seen a consolidation, a multi-year consolidation rather. It retested the high of 2007 in 2017, and again we are reaching the mark. This time at least, the charts are indicating that this momentum is here to stay. Considering the negative news that the stock, failed to react to. Charts are clearly indicating that this momentum is going to stay, and considering the fresh buying interest, we suggest one can in fact go long at the current levels also, and 480 on the closing basis should be a stop loss.
It's time now then to find out what has finally made it to Sharad Dubey's list of the Fab 4 stocks this afternoon. Sharad, good afternoon.
Good afternoon, Devina. The first stock is NMDC. The stock is up more than 6% today after the company stated that it has undertaken its second price hike for the month of January. The prices of fines have increased by 14% to almost 2,910 rupees per ton, and the lumps have also increased by almost 400 rupees ton to almost rupees 3,200 per ton. The stock has also been included in the Nifty CPSE index with effect from January 24, and the stock did hit its 52-week high. Up next is Bank of Maharashtra, which is up almost more than 6.3% after it declared its quarterly results today in the afternoon. The asset quality did hold up, and the net interest income rose by almost 36%, and the net profit was there at almost 135 crore rupees versus a net loss seen of almost 374 crores going in the last quarter. Next stock is Deccan Gold Mines, which is up almost 13.1%. The stock has seen its highest move in almost 8 months itself, and today itself the stock is up ahead of its quarterly earnings. And the last stock of the day is again from the mineral pack, Godavari Power and Ispat. The stock is up almost 1.8% after it received consent from Environment Board to operate rolling mill and also its iron ore beneficient plant. So basically both these facilities are under commissioning, and the operations will start in the coming quarters. Back to you.
Right, thanks very much for that, Sharad. Interesting list of stocks out there. Chennai Petro is the other one, and I will go to Samir with Telecom, but I want to look at this one as well. Last 7 days, good show by Chennai Petro. No real reason to drive the stock the way it has gone up, but in the last 7 days, 34% for Chennai Petro. Today as well, it's gone at about 5% Ajit, Mishra, a quick take on Chennai Petro if you do track this one.
Yes, we have seen a very strong rebound, but I doubt this rebound going to sustain considering the overall downtrend. So it's an opportunity for those who were stuck since ages, and today also we are seeing that the stock is slipping from its high. So it's an opportunity, of course, to exit, and for fresh buying in case if somebody wish to trade, then 135, 130 is the area where one can consider, but not at the current levels.
Samir, Bharti and the telecom pack.
So I think Bharti, again, the preemptive moves, that there will be only 2 players. If the AGR relief is there, it will be on the industry basis. It will not be only for Bharti and not for Vodafone. So I think everyone likes it being only two-player led. Good for an investor, but I think for a consumer end, government might not just allow that to happen. It'll be always mostly a 3-player led. Yeah, the 3rd player is already losing customers. There can be no bottom found in that. But I think Bharti, if you see the amount of money they've raised, if all of that goes to repaying the AGR dues. The cash book is still weak. It's not something which is overturned. The results will not show the full increase in tariffs this quarter, but from March onwards, that will come out. So it will improve the cash flow, but where does that cash flow go up? If 5G spectrum or bringing in 5G already has a 1 lakh crore kind of a capex to be planned by them, then again the cash drainage comes off. So I think the debt reduction is the main part for me, and if it happens on the consistent basis, then only I'll like it as an investor.
Okay, that's Bharti Airtel for you, registering fresh 52-week high for the time being. All right, let's shift focus back to banking and couple of earnings. Then Federal Bank has recovered from the lower levels of the day that we saw after the numbers. While corporate slippages were higher for the bank, asset quality has managed to remain under control. Shefali Malik has the fine print of the numbers. Shefali, once again, tell us the key takeaways of Federal Bank.
Well, actually, the numbers were not that bad for Federal Bank. I think the stock just reacted initially as a knee-jerk reaction to what Kotak was doing. But individually, Federal Bank numbers actually on many parameters are better than the expectations. The net interest income has grown 10%. Profit has grown by 33% on a YOY basis and 6% on a sequential basis. Their advances growth 13%, deposits growth 17%. So those numbers are also not bad considering Kotak has grown 10%. So they are growing 13%. Their margins are holding up at 3%, stable sequentially. Gross NPAs and net NPAs have actually come off on a sequential basis. Gross NPAs down to 2.97% versus 3.06. Sequentially, net NPAs down to net NPAs have come in at 1.63%, almost stable on a sequential basis. So there was almost a 50 crore rupees jump on the fresh slippages on the sequential basis, and a large part of the jump actually came in from the corporate slippages, which came in at total 321 crores versus 200 crores on a sequential basis. But also important to note that 98% of these corporate slippages came in from the existing watch list, that is BBB minus below book. But there were recoveries also to the tune of 40 crores, so providing cushion to some extent. The credit costs came in at 0.82% this time around, inching up slightly because of these slippages. But their overall provisioning coverage ratio actually improved slightly to 66.38% versus 66.16% on a sequential basis. And their cost to income ratio, which is slightly on the higher side, has actually improved a bit this quarter to 52.4% versus 53.47% on a sequential basis. So a 1 percentage point improvement in the cost to income ratio. And their overall total stressed book has actually improved quite meaningfully to 1.59% versus 1.73 on a sequential basis. So the numbers are barring those corporate slippages, which also seem to be factored in, because I was looking at some expectations. The gross NPAs and net NPAs expectations were actually much higher than what they've actually managed to report. So net, the numbers don't look that bad at all for Federal Bank.
Okay, thanks for that number crunching, Shefali. It's been a busy day for you, Kotak and then Federal Bank. And I just want to highlight, pull up the stock price of Kotak. It's recovered those initial blip, that losses that you saw once the number came. That's Kotak Mahindra Bank. Pull up Federal Bank, that's recovered from the lower levels. And now the stock's sitting with gains of about 2.5%. Shefali clearly highlighting the numbers are not looking that bad. Besides two factors, higher slippages, which have led to higher credit cost as well. And that's coming from the corporate book. So very quickly, Aditya, on the charts, the recovery that you seeing for Federal Bank, do you take any bet?
So again, as I pointed out earlier, I'll wait for the price action to settle on underneath. This still early days. It's oscillating between 92 to 94. If it sustains above 94, then there's a case of a long trade. If it doesn't sustain above 94, then probably it will again slide back to levels of 90, 88. So I'll wait for the day to end. Probably tomorrow it's a good day to take a fresh trade on Federal Bank. Above 94, if it sustains tomorrow, I'll go long for targets of 98 on the upside. If it fails to sustain above 94, 92, goes down below 92, a short can be initiated for targets of 90, 88 on the downside.
Okay, that's Federal Bank. I just want to take chart check on Escorts as well. The stock's been moving higher now for for the last 10 straight sessions. And of course, it did slip into the negative territory, but from those lower levels, you are seeing recoveries coming by. Look at that. Last 7 days, the stock's up 11%. And pull up the futures as well. You are seeing signs of fresh long positions also coming every day almost. So today also, you are seeing gains about 8% on the open interest front. Ajit, on the charts, the move that we've seen for escorts, what levels do you monitor on the upside?
So, Namit, you're right that we are seeing almost a vertical rise, and we have hardly seen any negative day in last 10 trading sessions. So, and plus, it has witnessed the fresh breakout from a declining trend line on the weekly charts as well. So that clearly indicates that this rebound may extend further, and the stock has potential to retest levels closer to around 750 to 760 in the near future. So yes, you can add to the current levels, and any dip also closer to around, let's say, 690, 700 zone, and 675 should be a stop loss, and upside 750 to 760 should be a target area.
Would you be interested, Aditya, in any of these, PSU names? I mean, the ones that are obviously going to come into the Nifty CPSE index, NHPC. You've got Power Grid, you've got Cochin Shipyard. Any of these names that excite you?
Nothing really, Devina. These are like 1 or 2 day up moves, and then it just gives up its gains and fizzles out, and they're back to their 52-week lows or probably all-time lows. I wouldn't venture into. Look at almost all of them. They made highs about 5 to and it's come off at their highs 5 to 6% easily. All of them, be it Cochin Shipyard or probably a Power Grid, they're significantly off highs, and the chart doesn't look that attractive that I would go ahead and venture into these stocks.
By the way, the markets are trading at the day's lows. Keep that at the back of your mind. And Kotak Bank is at 1615, but Reliance is down nearly 3% now, 2.97, 1534. So that is trading at the lowest point of the day, and it's pulling down some of the others along with it. HDFC Bank down 2%, yes, but Bajaj Finance too is corrected by about 2%. So there is pressure. HCL Tech is at arguably the lowest point of the day, 1.63% lower after delivering what was a fairly decent quarter. So a lot of these stocks are now trading lower. I wonder if the market breadth has worsened from where it was, because the broader markets were doing better. We're seeing a lot of pain at the large cap end of the market, but the broader markets too, I think, look at that market breadth. It's at the worst point of the day today. So it's not turned out to be a great start to the trading week. The day after, or the weekend after, where 28% of the Nifty weightage came out with results. And look at that. That tells you the story. Kotak Bank above HDFC Bank and TCS just shows you the quantum of cuts that this stock has had. But before we...
Just want to make that point here, sorry to interrupt. From touching live highs in the morning, you require just 1 day now to breach the 20 DMA. I think we've breached that on Nifty. It becomes very important when you're trading at live high level 20 DMA. So it was 12,225 and that's been breached now.
Yeah, and the ferocity of the fall, it's a very important point. The ferocity of the fall today that we've seen also in the Nifty Bank, by the way, because the Nifty Bank, we started off about 1% higher. We're talking about the Nifty and the kind of fall that we've had. The Nifty Bank nearly was about 1% higher. From there, we are 1.6% lower. That's the intraday travel of close to 750 points for the Nifty Bank, and that is no mean feat. So it's been a very tough day of trade, especially if you're a bull. Let's wait and watch if this changes anytime soon. But
I think Hindustan Zinc also has come out with its numbers. So you've got profits dipping a bit. The stock's down too. Revenues are coming to 4,626 crores versus 5,485 crores, while the profits coming at 1620 crores versus 2,211 crores. So that is something that probably, but not a major reaction to the stock. Granules India is the other one actually that I want to look at. Some news of its unit in Virginia. Seeing some observations that cut that came. It's obviously still higher by 3.5%, but you can see that small drop that's coming to the stock price. It's not at the highest point of the day. It's just somewhere around midpoint. 146.5 on Granules India. Time now to also take a look at what dealing rooms are recommending. Darshan Mehta is joining in with his channel checks. Darshan, good afternoon.
Good afternoon. And one of the stocks that's been spoken about today is Kotak Bank, down almost 5%. post a weak set of numbers. Dealers expect that the analyst con call will happen in the evening post market hours, but dealers expect weak commentary to come in. If you're looking at the numbers itself, just a 10% loan growth, extremely weak set of asset quality. So dealers expect that analysts probably will downgrade the estimates that probably will come in. So it's the second quarter, I believe, of weak financial numbers from Kotak Bank. So that's the first one. The other one which is down in today's trade is Havells. It's down 2%. Havells will report numbers this week, and dealers expect that Havells probably will report a weak set of numbers. So that is something that's been spoken about. And finally, two stocks on the long side, Dr. Reddy's and Asian Paints, both of them are up. Dealers indicate that some of the domestic funds are actively accumulating. Both of them are trading at fresh 52-week high. So there is traction, and they believe that the momentum will continue.
Dr. Reddy's keeps coming up in conversations as well, and not just at last 3 or 4 days. Darshan, thank you for that. Last 3 or 4 days, we've got 2 or 3 brokerages that have upgraded their target prices on Dr. Reddy's, 3,057. Within the pharma pack, it's interesting to see how this stacks up against some of the other names as well. But a quick chart check on Dr. Reddy's. Ajit, coming to you.
So, Devina, as we were discussing that among the pharma names, Dr. Reddy's, Granules from the midcap pharma space, they are looking very strong on chart. In fact, Netco Pharma, Ajanta Pharma. So Dr. Reddy per se is set for a fresh move towards 3,200 to 3,250 levels, and this risk to reward is also very favorable considering a very strong support at 2,960. So in fact, all the parameters are in the favor for a fresh long position at the current levels also. So 2,950 stop and 3,230, 3,250 immediate target.
Dr. Reddy, Samir?
Positive on it. They are doing a lot of non-core sale of the assets. So I think they are creating those, better working capital management systems. And their units have been now more operational for a longer period without any fluctuations from much of US FDA issues. So they are doing better. The generics have increased month-on-month prices in US, but they're still away from what ideally should be that kind of a price growth over there. So Dr. Reddy's, Sun Pharma, Lupin, these are the 3 names in the large cap end on the pharma space. I'll be watching for the next 12 months. But still, it's a preemptive move that, generics are done and the price growth is coming back.
All right. L&T Fin Holdings is the other one that reported its numbers, disappointed the street. Profits were up marginally, I think 1.9%. Lending book growth was just 5% or so. It's not really keeping the street too excited. It's down 7% at 118. Aditya?
There is selling, Devina, on the volumes without a doubt. But on the downside, its immediate support is that somewhere between 117 to about 116, just a couple of rupees away from what it is trading at current levels. I wouldn't go short at current levels of 118. Probably if it pulls back to levels of 120, 22, then I would look to initiate fresh shots for targets of 116 on the downside with the stop loss at 125.
Okay, I just want to mark both IndusInd Bank and Shriram Transport Finance. We spoke about it twice on the show, that the CV portfolio of almost all of these banks was showing an issue, and therefore maybe watch out for Shriram Transport Finance. Look at the way the stock has slid now, 1.7% lower, 1,069. And if, again, Shriram Transport Finance may surprise on the upside, I do not know that, but I presume that the market would make the safe assumption that if Kotak, IndusInd and HDFC, Kotak and IndusInd predominantly, have had some issues on that CV financing book, then there was no reason why Shriram Transport Finance would not have. The results are some time away. I think as a result of which this assumption, my guess is that Shriram Transport Finance as a stock has corrected a bit in the session today, and now just showing a bit of a dip. Aditya, want to come in very quickly first on the charts of Shriram Transport? It's just cracking right now.
It's just started to crack. Neeraj, you rightly pointed out. Its immediate support is at somewhere around 1,060, which was 9th of December's low. From there, stock witnessed a pullback. So if it breaks 1,050, one can initiate fresh shots absolutely on Shriram Transport Finance. On the downside, targets will be somewhere around 1,020 to about 1,010. And mind you, if 1,010 breaks and it starts to trade below 1,010, it's a fresh breakdown for the stock and can head to levels of 900 as well in that case.
Sameer, fundamentally? Is
So I
that a
think-
safe assumption for the market to make?
So I think Shriram Transport and IndusInd were not favored because of the CV cycle, and it's been there for, let's say, now almost 2.5 years. The CV cycle is showing 30%, 25% kind of a drop, retail end. The second-hand assets, which are the main financing delinquencies issues now, these guys are facing. Shriram Transport does more new CV financing, but the second-hand book which is sitting on them is a lot of strain going up, and I think now the recognition path starts for them. Same is going for IndusInd Bank, and their majority of book is still CV cycle. And if you see, they are expanding in non-CV book, but that's too slower to cover up for the asset quality issues in the CV book. So it's better to take exits on any kind of rises out here rather than buying it.
Okay, it's looking wobbly though. Let's wait and watch what it does in trade. Z, by the way, is trading in the day's low too, so you got to keep that at the back of your mind. I think it was a short call by either Aditya or maybe it was a short call by Aditya or Ajit, but I think that stock is trading at the day's lows, so do watch out for that one. Closing strategy. Aditya, any closing strategy that you have? And a quick follow-up on Z as well.
Yes, Z continues to trade lower. My sense it's a matter of time before it tests levels of 260. You should remain short on the stock for initial targets of 260. If 260 is broken out on the downside, 250 will be the next stop for the stock. Second stock to watch out for is NIT Technologies. That stock is also trading weak. It has made multiple negative divergences on daily charts and shorter-term time frame charts. Looks like it's headed lower on the downside. So you can go short on NIT Technologies as well with a stop loss at 1800. Looking at a target of 1700 initially, and that is also gone. Probably 1650 will be the next target on the downside.
Well, this has been an outperformer though. NIT Tech currently at 1779. It's a sell rating coming in from Aditya. Ajit, your closing strategy, any BTST or any STBT for tomorrow's trade?
So Navneet, metal pack we are seeing profit taking, and Tata Steel has formed a fresh shorting pivot. Of course, we are seeing just a profit taking, but still on the intraday charts, it has formed a shorting pivot. So one can go short as a STBT trade with 496 as a stop loss and close it on 482 as a target.
Okay, just pull up Coal India as well. I think that's down over 3% in trade. It's just been a one-way move now at the lowest point of the day, Aditya. I think it's also slipped below its simple 50 DMA. Do you initiate a fresh short position here?
Oh yes, Navneet, probably you can initiate fresh shots. Absolutely, it's a good trade. Targets will be 195 to about 185 on the downside. Stop loss can be maintained at 208, looking like it's going downhill and probably on its way down to make fresh 52-week lows as well. I wouldn't be surprised if it makes that.
Well, metal stocks, I guess. But by the way, just one more stock which is cracked is KEI in the last 15-20 minutes. It's almost fallen off 5 or 6% from the levels that it was trading at. Look at that sharp pullback that is coming to KEI Industries. So, interesting mover there. So that is one. Jindal Stainless Hisar or JSLH, that down cracked a bit in the last few minutes of trade as well. So that's the other one that you need to monitor. Look at that sharp slide. So do watch out for that one. And Telecom too is looking slightly wobbly right now. If you had these tactical bets on the metal names, I think we've seen these cracks happening. Coal India part of the metal index too is cracked. Would you kind of book profits there?
So I think if you see JSPL results, that shows that fundamentally there's nothing much to be getting these kind of valuations ahead. Whatever your low valuations were, you moved from 120, 130 to 180 in matter of weeks. So I think it's better to take some kind of profits off the table now, because the results will show something else and the prices show something else, and these cracks will open up and give you another at least a 15% kind of a downside in maybe a month or so, because metals were the, let's say, tactical bets a month or month and a half ago, and that's where the profit sits, at least in the major indexes. And Bank Nifty and metals from my side will be more negative for next 1 month, 1.5 months.
We'll leave it at that.
Yeah.
Sameer, thanks much for taking the time out and joining us and giving us your perspective. So that's, well, some advice. Let's wait and watch what happens to these counters. What is done well though today, it's been a day of red. But yeah, as we said, Bharti Airtel, Infratel, to an extent Power Grid, and GAIL continues to do well, 127 and counting 1% higher. So those are 3 or 4 names that you should monitor at slightly broader end of the spectrum, not necessarily the small caps. IRB Infra, Prestige Estates, Ajanta Pharma are amongst the stocks that are done. Coromandel is 602. Since that announcement of that urea deregulation, which may or may not happen, but Coromandel was at 575 that day. From there, it's moved on to 602. So the last few days have been pretty good for this one. Ajit, do you track Coromandel on the charts? It's been a steady mover the last few days. Do you think it can do more?
So, Neeraj, a disclosure that yes, we have a recommendation running on Coromandel as in our New Year picks, and it looks very strong on charts also, that the stock has been gradually inching higher with decent rise in the volume with every uptick, and now it has reached to the record high. So for short-term trader, yes, you may consider booking partial profit at the current level, considering that the stock may witness some consolidation and profit taking. But otherwise, one should definitely hold this stock. The stock has the potential to make new highs closer to around 650 to 660 in near future.
Avanti Feeds is the other one that to take a look at. It had hit about 720, 730 on Friday's session. I think they started off the day softer, is now sub 700. So 4.5% lower for Avanti Feeds. Does that give you an entry point?
Yes, people who have been waiting to get into Avanti Feeds, it gives you an entry point. Between 670 to about 665 is a good entry zone for Avanti Feeds. The uptrend is not over yet, Devina, so it's a good time to get into the stock and look for a target of 800 or probably 900 on the upside in the coming months as far as Avanti Feed is concerned.
Ajit, what would you advise people who were holding long position in Reliance Industries? The stock slipped now below its simple 50 DMA. Should people cover their position right now or stay put? What's the support here?
So, Navneet, if you notice that the stock has been consolidating above this zone of closer to around, let's say, 1505 prior to the result announcement, and then we saw an uptick before the result day. So I believe this level is going to play a very decisive role, at least in the tomorrow's session as well. So considering that we have a very strong support close by, I would recommend to wait and let's see whether 1505 holds or not. In case if it fails to hold, definitely exit. Otherwise, we may again see a rebound to around 1550, 55, and then you can use this rebound to exit those longs.
Aditya, what about Lupin? That's also down 4.5% to 5%, and there was some fundamental news there. They've got some observation in the Form 483, but at day's low, should shorts be covered here?
No, definitely not. I don't think so. Stock continues to remain weak. Navneet, hardly has crossed its previous peak, and now it's crossed its previous support as well. It's broken down from that. Next target that I see on Lupin is 710. At 732, I would continue to remain short. If somebody is already short, put a trailing stop loss somewhere between 735. If somebody is not short, probably fresh shorts can also be initiated with a stop at 740. Look for a target of 710 on the downside. Volume are picking up as we speak, so there is weakness in the stock.
Okay, let's start wrapping up the markets. Gentlemen, stay on. We'll take in closing thoughts from you in just moments from now, but it's not turned out to be a good day. About 1% lower for the benchmark indices, and the banks 500 points lower, and the market with two really worsening. And it should pull up the mid cap and the small cap indices on the screen. Maybe they haven't done as badly as the Nifty or the Nifty Bank, but certainly in the pressure today, a sea change from what we've seen in the last few days. But let's talk about the large caps first and what's not done well and what's done well. Few names which have done well, really worth talking about. Power Grid, because of the CPSE ETF rebalancing effect. Some gains for Bharti, Airtel and Infratel and Gale. But aside of that, not too much really. What's not done well, there is a long list out there. Kotak Bank 4.5, IOC about 4.5, again the CPSE ETF impact. Z ahead of the results tomorrow or day after, down about 4%. Tomorrow the results of Z come out. Coal India, a part of the metals index, has corrected, and Reliance, the big boy, is down about 3%. Also NTPC, Adani Port, and the other two heavyweights, which is TCS and HDFC Bank. So now you know the four culprits, which is Reliance, TCS, HDFC Bank and Kotak Bank, being the reasons why the index has seen such extreme pressure in the session today. But if large caps haven't done well, mid caps haven't been spared either, just that they've done slightly better than what their larger counterparts have.
That's right, Neeraj. The broader markets also succumb to selling pressure, and of course the week's not started on a good note at all. And this is coming after the Midcap index gained about 4% last week. So there you go. Nifty Midcap index closing with cuts of about nearly 0.6%. But I'll start off with gainers. IRB Infra Prestige Estates were the two stocks which I think throughout the session there was sustained buying seen. IRB in fact closing with gains of 50%, and you had Prestige which has been trading at its life high level. So good going for this one. IIFL Finance. Remember on Friday you had IIFL Wealth which surged about 12 to 13%, but today IIFL Finance went up by about 10 to 11%. And largely looking at the data, it looks like cash-based buying. Nearly 50% of the quantity traded has been marked for delivery here. Torrent Pharma, the buying momentum continues. This one scaling fresh highs in today's trade as well, and signs of long positions continue. Federal Bank, after a blip post, the numbers recovered from the lower levels. Of course, the slippages were on the higher side, but the numbers were mixed, and the stocks closing, I think, almost at the high point of the day. We'll await for more clarity in terms of what the brokerages are also saying with regard to the numbers. And ICICI Pru was the other one, which in a weak market like today's did witness some buying interest. So that's closing with gains of 1.5%. On the losing side, PFC was your top F&O losers. A good amount of shots were built up if you look at the futures activity as well, closing with cuts of 8%. And the reason for fall today was it gets excluded from the CPSE Nifty index. RBL Bank comes out with its numbers day after tomorrow. Ahead of that, of course, there was weakness that we've been talking among all private banks, and this one also fell by about 5%. L&T Finance Holdings disappointing with numbers, AUM growth of just about 5%, and disbursements indicated a downward momentum, 7.5% closing at lower levels. GNA Axles reacted negatively to the numbers, which were bad, I guess, across the board. ICICI Lombard didn't have a great session, and you also had stocks like Bank of Baroda and something like Lupin, of course, which corrected due to the inspection which was completed at its Vizag plant, getting some observation in Form 483.
All right, a few seconds left to go for market closing, and we've already highlighted that's not going to be a good one. 500 points almost given up by the Nifty Bank. That's the close for you. 31,100 has been reached on the downside. On closing for the Nifty 50, we're still above that 20-day moving average, so we just about managed to push ourselves forward. 12,230, down 121 points. Coming to the individual contributors again, it has to be banks all the way, along with Reliance Industries and the disappointing numbers that it posted. 41 points from Reliance, another 26 from Kotak, another 22 from HDFC Bank. What probably supported a little bit would have been ICICI Bank and ITC, but look at the no comparison.
Yep, and I think it was clearly the private banks and of course Reliance Industries which has dragged Nifty lower by almost 40 points. While Nifty is closing, by the way, 200 points off the day's high. You've got the India Volatility Index, which has surged after a while. Last week throughout, it was at levels of 14, 14.2, and today it's closing at levels of about 15.4. Let's quickly take a look at the market breadth as well, which deteriorated, I guess. We opened, it was in favor of the advances, but I guess just half an hour or 15-20 minutes into trade, and there was some selling pressure seen across the board, and 1:2 in favor of the declines.
Turnover then, in a falling market, we've got 35, almost 36,000 crores in terms of the NSE cash. BSE cash continues to lag. On the futures and options side, this is definitely a higher number for this.
Slightly, considering it's a Monday.
It's a Monday, it's start of the week, so it is a slightly higher number. But let's get in those closing comments from our technical experts as well. Ajit, Mishra, coming to you first. Come trade tomorrow. What is it that we're going to be watching out for in terms of levels of stocks?
So Devina, as we said in the beginning, that Nifty, I believe, considering that we have a support of 20 EMA, and we have already seen a very decent beating in the banking index. So a rebound is quite possible considering the support and the oversold position in the banking space. So yes, the bias has slightly turned negative of late, but I believe one can go short only on the bounce, not the current level. So one can reuse this rebound as a buying opportunity with a very small stop losses and wait for any uptick closer to, let's say, 31,500 to 600 levels in Bank Nifty to go short again.
All right. Aditya, what about you?
So there is weakness. We've engulfed 5 days or probably 6 days of move on the Nifty in a single day's downtake that we witnessed in trade today. It's a massive downward momentum tick that we witnessed. If Nifty starts to trade below its 20 DMA, yes, there's a case of further downside. So fresh shorting can be done below 12,220. I'm looking at a target of 12,140 on the downside to about 12,040. There's a gap. I think that will get filled up before we see any uptake in the markets again.
All right. We leave it at that, gentlemen. Thank you so very much, Aditya, as well as Ajit. Also, on that note, we're going to wrap our countdown for you this Monday afternoon from Neeraj, Navneet, myself, and the entire team. Let's put the show together. Thank you so much for watching.